The world is betting big on artificial intelligence. Tech giants in the US alone are set to spend $400 billion on the infrastructure to power AI. By 2028, global data center investment is expected to exceed $3 trillion. The scale of this bet is staggering. But here's the question. At payback time, who wins and who loses? Stock valuations are already flashing warning signs. The S&P 500 trades at 30 times earnings, well above its historical average of 20. The Nasdaq 100 sits at 33 times, compared to over 70 at the peak of the dot-com bubble. But here's the twist. Today's boom is concentrated in tech megacaps. In the S&P 500, tech stocks trade at 41 times earnings and nearly 10 times sales. Nvidia? 57 times earnings, 29 times sales. Broadcom? An eye-watering 110 times earnings. Meanwhile, the money keeps pouring in. OpenAI and Anthropic, the world's leading AI model makers, are raising billions each month. Every hyperscaler, Microsoft, Amazon, Google, is racing to build massive AI capacity. It feels a lot like the dot-com era. Vast infrastructure laid down at incredible cost. Back then, much of the fiber optic cable sat dark for years, bankrupting investors, even though the internet itself eventually transformed the world. Price to earnings, PE, equals 110 means that investors are paying $110 for every $1 of current annual earnings the company generates. Put differently, if earnings stayed flat, it would take 110 years of profits to earn back your investment. So what happens when the bill comes due? Can earnings from AI applications grow fast enough to justify 30, 40, even 100 times earnings multiples? Or will competition squeeze margins and leave many investors without a payoff? Even if AI succeeds, and it probably will, the truth is clear. Not everyone will share in the profits. Plenty of people could still lose their shirts if today's valuations prove too optimistic. Here's the reality. AI is a general-purpose technology, like electricity or the internet. The long-term potential is enormous, but markets are already pricing in decades of flawless growth. History tells us this story often ends in two acts. First, a speculative boom, then a painful correction. The technology wins, but many investors don't. The only question is, are we living through an AI revolution or an AI bubble? This is Gavril Talks Business. The bets on AI are the biggest in corporate history. But remember, even if the technology wins, not every investor will. At payback time, somebody always loses their shirt.